Well, I think we moved away from beyond capitulation since seen several weeks ago in flow and positioning, and the bounce came just as the S&P was reaching bear market territory. Now, I think what is most interesting is the way China will reopen post-lockdowns, which is potentially good for emerging markets, is good for basic material, good for luxury, and potentially also for travel stocks. The big question is what we will see today in terms of U.S. payroll. And the next two CPI report and the June labor data are also key. But considering what we have seen, clearly, I think we're recommending a posture into the three defensive sectors: consumer staples, healthcare, and utilities, because they're still showing the best relative strength and momentum. We suggest some nervousness in the rest of the market.
Well, let me just push back a little bit on the lockdown story, because it's too early, isn't it, to start celebrating. What we've seen in the last 24 hours or so is Shanghai authorities have now, locked down another 2.7 million people, which I know is, it's not the whole of the city, but it does indicate that it's a little bit too early to hang your hat on any investment decision based on the permanent withdrawal of lockdowns in China.
That's accurate. But the movement we have seen yesterday in fixed income, in particular in the govies market, is a move that we have seen only a couple of times over the past 20 years. In particular, the market has adjusted expectation on inflation pretty dramatically, especially across the treasury curves, both in the Eurozone, but also in the US. And with that type of inflation picture that remains troubling, having some data that actually counterbalance that pictures a very different outlook in terms of the economic outlook and potentially the inflation picture globally.
Matteo, can I ask you about September? Because there seems to be a lot of uncertainty. We've got the tightening now, but down the track, what happens in September from the ECB and from the Fed seems to be the big risk area for markets, whether we get 25 basis points from the ECB or whether it's going to be stepped up to 50, and also whether the Fed continues with the pace of very strong rate hikes as well. What do you think the dynamics are going to look like in September, and what do you think the action will be from both central banks?
Well, clearly the messages of an headline inflation at the moment are mixed. What we are seeing in Europe and what we are seeing potentially from the US could potentially be different. The real question is that what's going to be the outlook in terms of corporate earnings? And even if the consensus is clearly pointing towards slowdown in growth, to some extent, any recession could be really debatable at the moment. And the question is, how quickly will this adjustment in terms of the inflation expectation have a real impact on the economy, and how quickly US corporate earnings and US corporate executive can be vocal on a downturn in terms of their own earnings, in terms of their own sectors.